All right, and we should be live, finally. Folks, thanks so much for waiting with us here for the first couple of minutes while we resolved a couple of tech issues, but I am back with the man himself, the precious metals expert, Andy Schectman, co-founder and CEO of Miles Franklin, the endorsed precious metals solution by Thoughtful Money. Andy, you look great, buddy. How you doing?
Good to see you, Adam. Likewise. Always good to be here, my friend.
Thanks. Well, I hope you're staying warm today. I hear it's pretty darn cold in Florida. Temperatures in the 40s, iguanas falling out of trees. You doing okay?
Yeah, you know, people, I didn't know that coming from Minnesota, but they do. They basically get paralyzed, and they do. They fall out of trees.
They're cold-blooded, right?
Yeah. And they're not dead. They're just hibernating. When it warms back up, they wake up. So it's interesting to see it raining iguanas.
I'll bet. Well, we know it's an interesting time in the world when all these crazy things that haven't happened before. Massive inventory squeezes at the LBMA, silver prices at all-time highs. Now iguanas falling from the skies. Who knows what's going to happen next? Well, look, Andy, so glad you're here. Lots to talk about. And I'm particularly thrilled for folks that have been watching here. I think this is their first time seeing me after I have finished a 5-day fast I was just on, and it went fine, folks. Actually, it was really great. Thanks for all the support everybody sent. But I will tell you, folks, nothing beats that first meal after not having eaten much for 5 days. So anyways, Andy, looks like we're in the catbird seat here. All right, so I want to start this off. So I titled this this particular live stream, "Is the Gold and Silver Rally Back On?" And let me just start with this screenshot that I just grabbed a couple of minutes ago. We see that gold here is fighting its gold futures are fighting their way back up to 4,200, up 66 bucks an ounce so far today. And silver, not to be outdone, is up almost 4% today, back up strongly over 52 bucks an ounce. Who knows, maybe 53 bucks an ounce by the end of the day. Again, folks, those are futures prices. But Andy, is the rally back on?
You know, I think that there are a lot of things at play when they knocked it down. The answer is yes, but I think you have to examine what happened when they knocked it down. I mean, it got knocked down in 2 days. You saw in both instances a couple weeks ago, you saw massive amounts of gold and silver dropped in what's called the access market. It started anyway at a period of time in between New York closing and Asia opening. There's no liquidity in the market there. And when this happens, it would be the worst possible time to ever do it. In fact, there wouldn't be a trader on the planet that would ever do it. If they did, they would be fired and shot, and probably not in that order, as you're dumping copious amounts of gold and silver onto the market when the New York traders are gone for the day and there is no liquidity in the marketplace. And it hits stops because there's no one there to fill the order, so it just triggers stops all the way down. It's a drive-by shooting. The interesting part about it was that Michael Lynch, I believe is his name, I think that's his name, an analyst who talks about the Colmex, says, you know, there was interesting movement when the price got slammed down. 2 American commercial banks came in and bought massive amounts. It was Bank of America and Morgan Stanley. They came in and literally silver went right back up, and gold came up about halfway because it had hit so many stops on the way down, where funds that use algorithms to, you know, trigger sell limits or sell orders just fall. The interesting part about Morgan Stanley and Bank of America is you have the chief investment officer, of course, of Morgan Stanley, it's well known now, that said sell half your bonds and put 20% of your assets in gold. And then Bank of America lead analyst Michael Hartnett is saying, yeah, make that 25% in gold. And so these 2 banks came in and gobbled it up. But when you look at how this has tremendous strength and resiliency, I look back over my career, Adam, and any time that the market got hit this hard, they'd step on its neck and it would never come back. You know, everyone was saying, this is it, it's over. Gold broke 4,000, silver broke 50, the bull run is over, sell your gold. yeah, it never left, and it was done. If when the media said that, they said, by the way, the start of this massive sale happened when no rational trader would have ever done it. It was dumped in the middle of the night when there was no liquidity. This would have been done over hours or days during New York trading, not bang when there's no one there. If they would have said that, I think the market may have looked at things a little bit differently. Oh, I see. And then two big U.S. commercial banks who have changed their allocation recommendation to gold came in and scooped up physical on the cheap. There are a lot of games going on, bottom line. And I think you just have to have strong fingertips and see the bigger picture.
Okay, so a couple questions coming out of that. First, you know, I and a number of other people were saying, hey, look, just expect some sort of pullback in the precious metals anyways. I mean, they zoomed so far, so fast. No asset class is on a permanent rocket ride, right?
Yes.
And perhaps that's what we just saw, right? We just knew that we were highly likely to see something like that anyways. Now, you're saying there actually were players that went in there and did demonstrably active steps to dump the price down, right? They you know, dump product in a sleepy market when there was, you know, the New York business wasn't there to absorb it. And look, we've seen a lot of machinations like that in the precious metals markets over many years, as you mentioned, and usually those really worked. And I'm curious, what does your gut tell you? Was this a nefarious action to say, okay, gold and silver are kind of weakening here, they're maybe having a natural pullback in price, and let's really try to slam this thing down and kill this rally? Or you talked about the deep-pocketed banks that stepped in to buy. Could they have engineered this? Hey, we want to buy some more because we believe in this rally. We just want to knock the price down a little bit before we buy big.
I guess it could have been both. It looked as though the banks involved were European banks and Scotiabank were the ones that sold. And drive it down. Look, there are problems where these banks have very large short positions and they're exposed. And a silver market that gained nearly 40% in 2 months, to your point, a correction was inevitable. That is the definition of overbought. Mm-hmm. But I think there are a lot of banks and a lot of big players who were off sides in a very big way. And you could argue it was dumping in order to cover short positions and an opportunity for other banks. I don't know. All I can tell you is that there is no rational explanation to dump it at a period of time when there's no liquidity in the market. You would do it judiciously, slowly in New York trading. And again, to your point, it's also important to remember that even with this sharp correction, when you talk about silver, it's up over 65% this year. And gold is up over 50% this year, even with these pullbacks. But to me, it's not even as much who or why as it is what. Why would anyone do that? There's just no possible explanation for why anyone would dump it at a period of time to trigger all of the selling. It's a drive-by shooting. It's done for effect. Maybe it was rescuing stale short positions for one entity or an opportunity for others. But the bigger question is, why even do it to begin with? It would be the least opportune way to maximize this massive gain that you would have had if you're selling, unless that's not what it was.
Okay, so here's one concern that I've had, Andy, about, you know, the rally up to now, was that things got really tight. We're getting really tight inventory wise, and I'm going to ask you for an update on that in just a moment. And the concern, it was just, hey, the ecosystem, the precious metals ecosystem got caught by surprise by this inventory squeeze. But once the inventory squeeze heals, then you're not going to have as much upward price pressure, and then maybe the rally's over. Maybe it comes down a bit to some, you know, sustainable baseline. How big of a worry is that for you? Where are inventories right now? Because if inventories have healed a bit and we're still getting this upward price pressure, then that actually starts to look really bullish for the precious metals.
I mean, when you talk about the at the institutional level, I would argue that you're running into serious supply constraints. I mean, you look at the central banks and their numbers are usually backed up a little bit, but in September, they bought 39 tons of gold, which was up 79% month over month. And it's the highest month of reported net buying in 2025 so far. And you're continuing to see massive amounts of gold bought across the board. You look at Tether. Now, I've talked a lot about Tether and their role in the stablecoin legislation and how they are buying gold and Bitcoin with their profit. Their numbers on their third quarter balance sheet are almost 13 billion in gold. They're buying gold hand over fist.
Wow.
When they issued these stable coins, to back whatever it is that they're doing, they're backed by U.S. Treasuries, and the interest on those treasuries is not transferable moving forward. And they will put more and more into gold. They were just at the Beaver Creek Mining Summit, so they're dealing directly with the miners now as well. And so I think whether you're talking Tether or the central banks or the massive deliveries into COMEX or the massive deliveries in Shanghai, at the highest level, you're seeing a quiet rush for physical possession, huge amounts. And I don't know, I just think that this inventory problem will only get worse. Now, it's ironic that we haven't seen it as much on the retail level, but we're beginning to in certain areas. And I don't know if there's any coincidence or just it's the inefficiency of the U.S. Mint, but the U.S. Mint, the product availability is horrid and the premiums are out of control. Right now on gold buffaloes, you're going to pay about $300 over spot to buy a gold buffalo. They're as rare as hen's teeth all of a sudden. American Eagles, $200 over. Silver Eagles, $7 or $8 or $9 over. I mean, the premiums are all of a sudden on U.S. Mint products. They haven't made a platinum eagle in years. As a side note to all of this, you want to kind of draw a line between conspiracy and reality. I would urge everyone to go to Road to Ruda's website or to YouTube channel, Big Swear, and watch his 3-part series with a man named Jack Sermon, which was done a couple of years ago. I remember almost falling off my chair hearing it. Jack is the guy that developed the Eagle program for the U.S. Mint, and under Janet Yellen, he said he was told by his superiors, who would have been Janet Yellen, the head of the Treasury, to only mint as many Silver Eagles, the fewest amount possible, without creating a global revolt. He admits this, and he's been at the Mint since '86, since they started doing it. There's no question that the U.S. Mint is by far the hardest mint to get product from reliably, in my opinion, at a reasonable price. But I wonder, is it starting to spill down into this side of the market, because you're beginning to see people wake up, not the thousands of sales, everyone buying, tiny little bits, but on high levels, we're seeing very, very, very large orders, and a lot of it in gold. What does it mean? I'm not quite sure, but simply to say at the top, it's not getting any better. Is it starting to trickle down? Yeah, maybe it is, but it hasn't reached Main Street yet.
Okay, super interesting. Let me just ask you a question about stablecoins, and forgive me if this is naive. What are they doing with this gold? Why are they buying it, and what are they doing with it? Are they just kind of putting it in their treasury and just holding it in the state? Because technically, a stable coin kind of needs to be stable. It needs to be a peg to something. They want it to be a peg to the dollar. And if you got a bunch of gold in your stable coin, if that's somehow, if the price of your stable coin is somehow tied to that, that's not actually very good, because gold's volatile. So are they just sort of keeping this in the treasury of the stablecoin company?
Yeah, and I'm going to talk about something else also. Now, again, maybe I've been stupid to say things, or maybe I'm just courageous enough to say what I believe. I don't know. There's a fine line between that and that. But, there is a fine line between conspiracy and reality, and I've learned that the hard way over the years. Now, Bo Hines was Trump's crypto czar until August, and now he just happens to be the CEO of USA Tether, which is already Genius Act compliant. Mm-hmm. Now, if you wanted, as I've been saying for a long time, to bring back manufacturing, the only way to do it, because of Triffin's dilemma, is to shed the reserve status and devalue the dollar. Everyone's talking about the debasement trade. Even mainstream is talking about the debasing of the dollar. Well, the way to do that is to revalue gold. So what if he says to Bo, all right, Bo, with all of the interest that you get, you're going to buy Bitcoin, you're going to buy gold. You're going to use Bitcoin to pay off the debt. You're going to buy gold to devalue the dollar. you have a major player now who will be moving every time money moves, and the backing of it by stable coins has to be bought by U.S. Treasury. That's the one-to-one peg. It's the treasuries, and dollars, but it is the interest that is not transferable on those treasuries. It can't. They're not giving the stablecoin holder the interest.
Right, they
Instead,
got to
they're
do something
buying
with that
gold.
interest, so they're buying
Yes,
gold.
yes.
But so, and again, this is me just thinking this through in real time. So I see how that benefits the corporate owners of Tether, because hey, we're getting a lot of gold, right? It's not benefiting the stablecoin holder per se, except I guess it makes Tether maybe more solvent. How does that help with the devaluation of the dollar?
Because the higher the price of gold goes, the lower the value of the dollar. So in other words, when you measure the dollar falling 7 or 8% against a basket of crappy currencies this year, the dollar index, measure it against gold and see where it is. It's down 50.
So let me just interrupt you then. So are you saying that the sort of on a stealth way, the government actually wants the price of gold to rise versus the dollar?
Yes, I do believe that. It is the only way you will ever be able to reshore manufacturing is to devalue the dollar. When when Roosevelt devalued the dollar or confiscated gold at $20 an ounce, he then devalued the dollar by 40%, making it $35.
And he had to do the confiscation before he revalued. A different thing this time around. Yeah.
Correct. And I really do believe that is what they want to do. Now, is there an arrangement for the Treasury to buy that gold? I don't know. It wouldn't surprise me when you put Bo Hines in there. It's no different than putting Stephen Mirren in the Fed, who is the architect of the Mar-a-Lago Accord, which again speaks to a devalued dollar. And you talk about gold revaluation, it's not a conspiracy theory. I mean, read the Genius Act. I think Section 9 or Section 10 talks about next year they'll revalue gold. Now, some say market to market. James Rickards is going around saying, I think he says 24,000 is the number he comes up with. We don't know what that number is, but raising gold to that level not only devalues the dollar substantially, but gives the Treasury General account a huge boost of free money that would come in the form of selling or giving the gold certificates to the Fed, and they just print money out of thin air and give it to the Treasury. We can go into how that works if you want, but the bottom line is it devalues the dollar. It gives a large sum of money to the Treasury that can work down its debt. And then you throw in Judy Shelton pegging the back end of the bond market. You bring back manufacturing at no upfront borrowing costs. Is it the way to do it? I don't know any other way besides full-on default or hyperinflation. This is kind of a third option, soft default on the dollar.
Okay.
And, but one last thing, you look at I'm going to butcher the name of this, Kyrgyzstan. Yeah, their government has just officially registered a U.S. dollar. It's USDKG as a stable coin, pegged 1-to-1 to the dollar, and fully backed by gold reserves under state control. And so we're seeing gold move into the monetary system, and that's the bottom line. Whether the central banks, the commercial banks, the massive deliveries into COMEX, these people that are bringing in billions upon billions upon billions upon billions every month for the last year, since last November, they don't do this just for the hell of it. And as you've noticed, since all of this gold's been coming into the country, isn't it interesting to see that gold is up 50 plus 60%? Right. They don't do it just for the heck of it.
Yeah. All right. So I got to ask, make sure I heard you right on this. Did you say that in the Genius Act, there actually is a clause in there that talks about intentionally devaluing gold?
No, there's revaluing gold. Yes, there is a clause in there about revaluing gold.
Revaluing gold. Yes. Okay. Revaluing gold, meaning at a much higher rate than
either marking it to market because it's on the U.S. government balance sheet at $42.22 an ounce.
Okay.
Either remarking it to market, or as others say, Mike Maloney says 10,000. He uses M1. Rickards has a different metric, says 24,000. Who knows where it goes to, but that is the theory.
Okay, and we've heard Treasury Secretary Scott Bessent, talk about monetizing, some of America's balance sheet, and that would, in those same sentences, talking about revaluations. So this could be really interesting. Actually, maybe next time, Andy, I'll read that, put the clause up on the screen, and we can talk about it a little bit more, more in depth. On stablecoins again for a second. So I have also heard, and you may know more about this than I, but I've also heard that there are one or more stable coins that are out there now doing what I've sort of been asking. How come some billionaire or billionaire company hasn't been doing this so far? They're going out and they're actually buying pretty big equity stakes in mining companies and royalty and streaming companies. So you're nodding. So that actually is going on. We're seeing
as I mentioned,
holders start to lock up mining supply.
Yeah, Tether was at the their corporate entity was, their representatives was at the Beaver Creek Mining Summit in a month or two ago, which is one of the biggest in the United States.
Yep.
So they're going there to disintermediate the marketplace and go directly to the mining companies, and whether it be securing future production or buying up interest in the mines themselves or whatever. It's no coincidence that you see them there. At the same time, their numbers come out and show they have between 12 and 13 billion worth of gold in Swiss vaults right now. They're a big buyer.
I mean, so that makes total sense to me, just from an investing standpoint. I just don't understand, why is it stablecoin companies that are doing this? Why not a Tesla or other companies that like depend on mining, depend on silver for their product lines, right? And again, I can see a lot of reasons why anybody with deep pockets would want to buy into this market and almost kind of corner parts of it. But I don't understand why this isn't being led by industrial companies that are just saying, hey, look, we need to have dependable supply to this stuff. So why don't we own part of a mine or all of a mine? So if we need to, if prices start getting crazy, at least we've got a source coming into us.
Well, I think you're seeing that. I mean, I looked at this just the other day, month-to-date totals in November, just through the first few days of the month, there were 3,029 contracts delivered of silver times 5,000 ounces. That's over 15 million ounces of silver delivered. I mean, that's a torrid amount. But this is not even a primary silver delivery month, and it shows huge volume in a non-delivery month.
Mm-hmm.
But who's to say that Tesla or Samsung or Sony haven't been behind some of the massive deliveries we've seen to COMEX? Because not all the silver's leaving. It could just sit there in a vault until they need it, but it's no longer available. It's in a not the registered account. It's set aside safely, and who's to say they're not there? But to your point, what's very interesting is, as Sean Kuhn, the CEO of Dolly Varden, has told me, that, as I probably mentioned on your show before, that China is doing this as well. They're flying to Mexico and Peru in particular and buying doré and concentrate directly from the miners
mm-hmm.
to disintermediate the marketplace. So there's a lot going on under the scenes that, under the scenes that we don't know who's doing it. But the fact that you're seeing all of these deliveries, I would argue, to your point, that there probably is a lot of the industrials. Now, it's interesting, real quick, you bring up one very interesting point, and that is this. Here's the stage that is set for a massive battle. You have the industrials, Tesla, Samsung, whatever, Sony. You have the hedge funds. Oh, they smell blood in the water.
Mm-hmm.
And now the third and fourth piece to that puzzle, U.S. government just officially lists silver as a critical mineral, putting a floor under the price. And China is now limiting exports moving forward. There is a battle going on, not only to drain the world's exchanges slow enough as to not cut off your nose to spite your face so everything blows up. And now you have governments acknowledging that this is more about policy now, not just national security and policy, on top of the battle between the industrials and the investors. It's setting the stage. And when you realize just how small of a market cap silver has, I don't tell people to buy silver to get wealthy, but it has enormous upside if you realize that you start throwing government money into this and putting a floor under it and limiting exports. Yeah, the potential for silver is quite enticing. I mean, you could argue it's parabolic.
Okay, so if you can just elaborate a little bit more on this critical mineral part. So it was placed on a list earlier this year of critical minerals, but as I understand it, maybe it was a proposal.
It was a proposal. Yeah, it was a proposal.
But just recently, it was actually the USGS did actually say, okay, we're accepting the proposal. It now is a critical mineral that's on our critical mineral list, right?
That's correct. And, it's funny. It's the United States Geological Survey Commission. It's part of the government. They're also the ones that came out a year ago, maybe, and said that they could see silver being the first element struck from the periodic table of elements. They publicly said that. But yes,
because we're running out of it.
Yes, because it's found in nature in a form called epithermal, like your skin is epidermis.
Mm-hmm.
The big deposits were found very, very long ago. I was listening to an interview that Keith Neumeyer was giving the other day, and he was saying a lot of the primary silver companies are actually moving more towards being gold mining companies, right, because it's so difficult. Of the 850 million ounces mined last year of pure silver, there was only roughly 20% of that, 170 million or so, that came from companies mining silver. It's so hard to find the deposits because they're right near the surface. The big deposits were found forever ago. So First Majestic, I believe, is the purest of all the silver companies in terms of their just being a silver company. It represents 50% of what they do, but
right,
it's becoming really hard to find, is the bottom line, the big deposits that have already been exploited. So most of what comes to market is byproduct mining of other minerals, and they stumble across it.
Okay, and I'm looking this up in real time, but what exactly does it mean to be a critical mineral? Is it that we're in danger of, obviously they're essential to the nation's economy or national security, and have supply chains that are vulnerable to disruption. So You're talking about both, right? You've talked about how silver is really important, not just commercially, but also in military technology, but also the supply is vulnerable because it's getting harder and harder to find, certainly in pure form.
Yeah, most of our silver comes from Mexico, Peru, and Canada. And it's interesting, I mentioned Mexico and Peru. The Chinese are going right to those miners and saying, we'll pay double what the West will. We want your doré, which are the crudely refined bars. We want your concentrate, which is the byproduct mining sludge. Right. And we'll pay double, we'll send it back and refine it ourselves. Now, this is coming from the second largest producer of silver on the planet. David Morgan will tell you, when he went there to tour the mines, China told him, we're number one, we're not number two. Whatever they are, they're massive producers of it, and they're flying all around the world to buy stuff and refine it themselves when we almost entirely need silver. When we need silver, it's almost entirely coming from other countries. We are reliant upon it on other countries, and that is a fragile supply chain. It's not a good thing. At the same time, you got China building deep water seaports in Peru and trying to build their infrastructure. I mean, there is a game of chess going on right now that people really aren't seeing, and that game of chess is who can secure all of the world's commodities. Shh, don't tell, do it quietly, don't freak everyone out, but this is a battle of gaining supremacy on the commodities of the world. It's shifting from paper promises by the West into who's got the goods around the globe.
Okay, so to your point there about China being a big producer now of gold, at least, do they export any, or do they keep it all?
They do export, but they are now limiting exports as of, I don't know, within the next month or two. Any silver that leaves the country has to apply for a permit with the government, and they were big exporters. They're not going to export quite the same way, because I think it's in response to the moves that the U.S. is making. It's in response to the realization that they have a real advantage in having the supplies that they do. And why make it any easier for the U.S. when we're doing the things that we are doing in terms of tariffs and in terms of trade restrictions and sword rattling, saber rattling. I just think that they're smart to do that, and I think it will be a growing trend. But they just did publicly announce that they are going to limit drastically, and they have also characterized it as a matter of national security as well. This is going to be a trend that you will see, a nationalistic trend, I think, as time goes on, as the prices go higher.
All right. Well, super interesting. And I've also, Andy, been interviewing a few folks on this channel recently spoken at length about the current administration's sort of Monroe Doctrine 2.0, which is heavily inspired about, hey, the Western Hemisphere still has a lot of great resources. Let's optimize for their use inside the Western Hemisphere, right? Let's actually try to not let China eat our lunch here. And so, some of the stuff that is going on right now in South America, and folks, I'm no expert on this, but it seems like the subtext of it is, hey, let's make sure that we're locking up really good deals for, U.S. companies down there that hopefully also benefit, the local countries down there, but also kind of at the same time demand those local countries do less business with China. So it does very much seem like there is this grand game going on that you're talking about.
Yeah, let me just read you this one paragraph. China,
Sure.
The world's largest silver refiner, is restricting exports and has announced that starting in 2026, all silver exports will require individual government licenses, effectively giving Beijing full control over every ounce leaving the country. This move classifies silver as a resource of national interest, signaling a strategic shift towards state-managed supply. And then at the same time, you got the U.S. adding it to the critical mineral list. This is no coincidence, and it's a battle for the world's supplies of things that are critical to infrastructure, critical to military, critical to a world that is digital. It is, you need silver to transmit electricity across, long distances. You need silver, and I think that's becoming. I think that's, for semiconductors and electric vehicles and defense and solar panels and on. I think that's becoming clear.
Let me ask you this. So for a long time, silver was an heirloom, right? It was real wealth that you kept in your family, right? And passed down, often in the form of flatware and, I don't know, candlesticks and stuff like that. But it was a way to say that, look, this metal's got real worth. And we think it's going to continue to have worth in the future. And therefore, let's keep it in the family. Let's pass it down from generation to generation. Do you think silver will actually start to become an heirloom metal again as the world just wakes up to the fact that, hey, it is getting more and more scarce and it is really important and industry wants it and whatever. Like, if you want to get rid of this, there's someone who's going to take it from you, no problem. But maybe just for your family's sake, having ounces of silver, physical ounces that you pass along from generation to generation, will become back at the forefront of the American mindset or the Western mindset of, hey, this is how you kind of help your progeny out in life.
Yeah, why not? I think absolutely. Back then it was money. I mean, silver was used as legal tender.
Right, it actually backed your tender.
Yeah, and I think it went through a period of time where, it was not recognized any longer, other than being, a candlestick or whatever. I think that it is becoming, it's re-entering awareness. People are beginning to become aware of its real value, and I think it's a valid point. Yeah, I think it would be silly not to.
Yeah,
I think that's the beautiful part of gold and silver.
Yeah, I wonder if we will eventually see almost like a De Beers style marketing campaign from the precious metals industry of, like, hey, you give if you love your fiance, you give her this eternal element, right? This diamond that she'll wear forever. Like, hey, if you love your kids, then of course you want to get some ounces of this stuff that will be passed down to your kids and your family. Anyways, we're
well, I mean, what can you say long after the bills in your wallet, Adam, are hanging from a frame in the Smithsonian as an example of what used to be
right
gold and silver that you pass on to your kids, that make it on to their great grandkids and their great. In the year 3000, gold and silver will still be money. The currency in your wallet won't be. And I think that's, to your point, there are very few things you can pass on to family members that have that intrinsic value. But also, great grandfather Adam bought this for us, and the sentimental value is something to be said for that as well.
So it's funny. I had a business partner years ago where, when we were buying silver, at some points in single digits, right? I didn't get a chance to buy too much below $10 an ounce, but I had bought some there. And we were kind of saying, we're kind of making a bet here that we're either going to be looked at as the family kook, in the family lore, or the family genius, who bought this stuff when it was real cheap. and then it got passed down through the family. So still TBD, but silver at say $8 or $9 an ounce now versus $52 an ounce is starting to look a little bit more genius than kooky. Hey, real quick, I just want to put this up here. I've seen a couple of folks who have reposted this stream on X. And folks, I don't know exactly how to tell an average viewer here to do that. I don't know exactly how these guys figured it out, but I'm hoping it's easy, that several folks have. So if you're watching this and you've got an X account, please follow Papa Steve's example and repost the stream on X while we're doing it. One more thing on silver, Andy. Folks know that the US dollar was on a gold standard, right? And there was technically in the past a gold window where you could bring up your paper bills and say, hey, give me gold, right? I mean, there literally was a gold window there at the banks. There used to be a silver window too. I mean, we had silver certificates here in the US. I mean, in the 19th century, sorry, in the 20th century, I don't remember when they ended, but I remember even as a kid, sometimes, getting dollars and, once in a blue moon, you'd get one that was a silver certificate, which would say redeemable for silver, right?
It does. Payable to the bearer on demand in silver coin. Same thing it says for the gold certificates that ended in 30, I think the last one they made might have been in 34, gosh. Well, obviously it would have been after gold was confiscated, maybe 28, 29, or before gold was confiscated. I'm not sure the year, but I have a bunch of them in frames, and they all say payable to the bearer on demand in gold coin instead of in God we trust. There was, and again, you want to get into conspiracy theories. There are a lot of people who think that had something to do with President Kennedy because he wanted to take the power of money creation away from the Federal Reserve, give it back to the Treasury, and issue silver certificates. So it would have been sometime right around his passing that they ended. But it's true. Gold and silver have been money. Now, I don't think we're going back to a system where gold, and so you could argue maybe in some of the individual states, we're going like Texas and Florida, I think you will deposit your metal into a state-run vaulting system, and they'll give you a credit card or something on your phone. I don't think we're going to go around using gold and silver as money anymore, but I do think it's going to be reintegrated, especially gold, into the monetary system in other ways across the globe. The bottom line is gold and silver are becoming far more important than they have been in a very long time. And I think there is the realization that in a system that is based on trust and nothing else, I think it's past its prime, and people are moving to something that is far more trustless, and it will be some sort of a marriage between blockchain technology and physical precious metals, I think, as a way to reinstill, kind of like they're doing in Kyrgyzstan, to reestablish trust and confidence in the system. And Kyrgyzstan is they're in the Eurasian Economic Union. They're close with Russia. They're close with China. The rails are being built to, I think, use gold or gold-related bonds to take the place of U.S. Treasury bonds. And there's a very interesting theory right now going on between Vince Lancy and Eric Young, and that's exactly what they think is happening right now. That there is a huge spike in warrants on the Shanghai Futures Exchange, and like almost over 100 tons or near 100 tons, but that he believes that and there's also a massive amount of silver that Russia is no longer exporting that hasn't been accounted for, a huge amount, and there's no one knows where it is, of gold that they used to export as far as recently as 2024, and that they believe, along with Russia issuing a yuan-denominated bond next month, that they are going to move it to the Shanghai Metals Exchange vault in Hong Kong, their new vault in Hong Kong. Remember, I've talked to you about how they're building vaults all around the place, but to take gold out of China, it has to go to Hong Kong, that they're moving it there to act as a repo facility. And so to act as a repo facility, that will be an alternative to the US dollar. Now, these guys are cutting edge, Eric and Vince, and I wouldn't discount what they're saying. So any way you look at it, And when I say gold, I mean silver too, but gold has a more prominent role in the workings of the monetary
Of the
system.
monetary system. Yes.
Silver's just been viewed as critical, and and by the people who understand it, they know they need it. But both Vince and Eric think that gold, or a gold-denominated bond, will come out of Hong Kong as part of a new offshore repo collateral system, and that will be a massive blow to the U.S. Treasury market, is what they're saying.
Well, it's so interesting. I just want to connect a few dots. And Andy, you don't necessarily have to agree with this, but I have talked to folks like Brent Johnson and a few others recently about the stablecoin movement. And Brent, who, you're probably familiar with this dollar milkshake theory, and he's arguing that the dollar will likely strengthen versus other currencies, not versus gold. He has a new kind of great theory, great meaning wide in scope, about how US dollar stablecoins may actually help the world dollarize or re-dollarize versus de-dollarize. And I know, Andy, you've been paying attention to what's going on with the BRICS countries, with their intent to create a competing currency, and you've just mentioned a few other potential things on the blockchain-based solutions that may come out that are gold-backed. And I don't think Brent would necessarily disagree with you. What I just want to raise here is we may be entering a really interesting time. I want to steal a word from both Michael Howell and Jim Rickards, which is currency wars, which is we may see all these new different types of currencies getting pushed out there in the world. And some of these things can happen at the same time, or in other words, the world could actually re-dollarize using these US dollar stablecoins. And basically the general premise behind that, Andy, is if you ask almost anybody in the world outside the US, if you could magically tomorrow earn, own, and transact and save in another currency in the world, which currency would you pick? The vast majority of the world would pick the dollar, right? Not necessarily saying you and I would agree with them, but they just would. And you probably saw, like, George Gammon, when he went down to Argentina and said, hey, what do you want, dollars, Bitcoin, or gold? Pretty much everybody said dollars. And that's just the way that most of the world thinks, right? And so the world could rush more into the dollar if the stablecoin makes it a lot easier for them to get access to it. But at the same time, we could have these more hard asset-backed, precious metals-backed solutions coming out, and the people really paying attention to purchasing power devaluation, may start adopting those a lot faster and a lot sooner. And then over the grand scheme of time, we'll see who wins out. Now, I think Andy and I, and probably a lot of folks who are viewing here, would bet on the ones that are precious metals-backed. But my point here is we may be entering an era where all of a sudden, kind of what we knew as the standards for fiat money around the world gets real crowded and complicated because there are all these new solutions coming in. Any thoughts on that, Andy?
I think it's fair to say. I mean, you look at the Kyrgyzstan stablecoin; it's backed 1-to-1 to the dollar because it has the most frictionless rails, if you will.
Right.
And that there's a point, and I think you would expect to see, if you are going to de-dollarize, I would expect to see a massive increase in dollar use leading up to that. You're taking your dollars, I don't care how what they're pegged to, or if it's a stable coin, and you're using them to buy things, to buy commodities.
Right. So sort of Gresham's law in that example. Hey, let's get rid of the stuff I think's not going to keep its value and hold on to the stuff that will. Yeah.
Yes. And while the rails are being put in place quietly to challenge it. And this is just it. You can't challenge the biggest kid in the schoolyard until you're ready to do so. And I think that's what these countries understand. And so, to Brent's point, yeah, you may see that. I think the milkshake theory is largely very well thought out and accurate, but it has an expiration date. And I think Brent would argue that too, that ultimately it runs out of steam. A currency that is backed by nothing, that is nearly 200 trillion in debt when you throw in the unfunded liabilities. And even if you take all of the wealth in the United States and then add into it the debt of the United States, both public and governmental, getting to the point where there's more debt than there are assets, even in the U.S. Now, I don't think the U.S. is going to default, but they are going to do something. They're going to do something drastic, and
what's the relief valve, right? If you're not going to default, it's eventually got to be the purchasing power of the currency.
That's right. So, and that's how you do it by buying all of the assets, like gold, like Bitcoin. You are devaluing the dollar, aside from the inflation that we see, and I think that's for sure. So, and Brent, to his point, yeah, I could see that happening as well, a period of time. But I think there will just be more assets purchased with those dollar-based stable coins. And then if you realize that the issuers of those stable coins are buying assets, ultimately it's about foregoing the strength of the economy to support the bond market, which will be backed by those assets and deliverable in those assets in order to reshore manufacturing. I think all of that is valid. I really do.
Well, and if at the end of the day, it's all about the assets, then as an individual sort of survival and thriving strategy, then the question becomes, well, then why don't you just get some direct exposure to these assets, right?
Yeah, absolutely. There's no question about it. I mean, that's the idea. I think it won't be easy. I think there'll be a lot of volatility like we've seen, but I think it's unquestionably, this is the trend. And just as a side note, you want to talk about where things are going into the end of the year. I was reading something this morning that there's some institutional traders that see a massive breakout in gold in the next few weeks. I'm not saying it's going to happen, but we just saw a $96 million coordinated call block, it's called, just hit GLD, which with calls expiring in December. This means that an institutional investor or multiple funds in coordination just bought roughly $96 million worth of GLD call options.
Okay.
And a call option profits when the price goes up. And with the December expiration, they're betting gold rises within weeks before those options expire. And when you call it a coordinated block, this means that one or several large orders are placed together. And this suggests intentional institutional positioning, not retail speculation. So in plain English, this means that someone with some serious capital believes gold will move sharply higher soon to put a $96 million bet on it. And then you look at the deliveries we've seen in October, which is a pseudo delivery month in gold. It's turning out to be maybe the third largest delivery month in all of 2025, and it's not even a primary delivery month for October. And November deliveries are again, as I mentioned, off to a big start. December is the big one, where both gold and silver are delivered in December. So it might have something to do with that and how much of it will be delivered. Mm-hmm. It may have something to do with the Fed pivoting and lowering rates again. I mean, all I can tell you is that everything that I see is very bullish, and I try and be as open-minded as possible. I'm not married to the bull. I just simply think when you look at the positioning of the biggest money in the world and all the actions going on by the governments around the world, it's hard not to be when you look at this from a big picture.
Right. Okay. So let me just reiterate. If somebody's making a big call option bet for December, option expiry traditionally is middle of the month. We're approaching middle of the month of November. So folks, they're betting that's going to pay off in at most 4 weeks. And as Andy said, they generally place those bets hoping it's going to pay off sooner rather than later, because the upside for them is greater if it pays off sooner. So that is a big bet. I'm also curious too. What we see a lot with the markets in general, and with stocks that have done well in a year, is you get end of year window dressing by the big funds, right? Where they basically, if you missed out on the run in, say, NVIDIA this year, right? You were skeptical of NVIDIA, but NVIDIA had another great year. Well, you want to make sure you buy some of it by the end of the year before you're locked into what you're going to have to report in your 10K, so that you can say to your investors, okay, yeah, we actually own this thing that did really hot, this past year. It's optical. But if you don't own it and people say, wait a minute, this company had a great year and you didn't own any of it, like, we start questioning your judgment as a capital manager. So I wonder, Andy, and I'm curious if you're hearing any rumblings of this, might we see a pickup in buying of gold by financial institutions, by funds in silver, just to be able to say, hey, yeah, these assets were up 50, 60% in 2025. So yeah, I want to have some of that on my balance sheet to show you that, yeah, I'm not an idiot. I didn't miss out on the trade totally.
Yeah, and I, I'm a little confused on that one because if I'm not mistaken, I think their calendar, you're already into the first quarter of their next year calendar, if I'm not mistaken. In other words, I think that they don't work on the calendar we do.
I think a lot of these guys do. It depends on the fiscal year of their company, but a lot of them are tied to the calendar year. But I guess my question for you is, just having worked in the precious metal space, do you see the sort of end of year window dressing with the precious metals when they've had a blockbuster year like they've had now, or not?
I mean, that's a tough one. I would say that this bet certainly would pay homage to that is the
looks
case.
like an example of that, yeah.
But look, all of this stuff has been going on. I think we'll know more first day December deliveries. What interesting thing is that we've been seeing huge amounts of mid-delivery cycle deliveries where immediate contracts are issued for delivery, like record amounts. And that happened right around the time when the market got nailed down a couple weeks ago, where the majority of contracts that are going to deliver are announced on the first day of delivery. But then 3 days in a row, we got records. Something like 6,000 gold contracts were issued over 3 days for immediate delivery. That normally doesn't happen. Normally, yeah, we're going to stand for delivery, but on the 15th, 16th, 17th, or whatever of the month, when the price got nailed down, immediately you have all these contracts that are purchased and will stand for immediate delivery. So there's a lot going on with delivery that is maybe not as easy for people to gauge just by looking at the first day delivery. But I would argue that would probably be a very big one in December, and that will answer your question largely. Who took massive positions and is having it delivered into COMEX? Doesn't mean it's leaving COMEX, but it's under their control within the COMEX ecosystem in an eligible account.
All right, got it. We're getting near the end of the hour, so I want to take a couple of user questions in just a second. Let me ask you this, though, first, Andy. So I was looking at the headlines briefly this morning, and we got some inflation readings. And here's the headline: October inflation unexpectedly crumbles amidst biggest drop in rents in 15 years. Now, this is something that a number of the people whom I interview have been predicting, which is in the CPI calculation, right? The official headline inflation number that everybody looks at. Shelter comprises like 40% of it. Many folks that I've been interviewing have been saying, hey, look, that's a very lagging indicator. It's the biggest indicator by far in the CPI calculation, and it's a very lagging indicator. And more real-time data in housing and rents in particular are showing that those are disinflating, or in some cases deflating. And so they've been saying, look, that's going to start dragging CPI down the more we get into 2026. And I think we're starting to see evidence of that. So I'm just curious, the historical mindset has been high inflation, good for gold, right? Because gold is an inflation hedge. If people start thinking, really disinflation is going to be in the driver's seat in 2026 because CPI is going to be trending down, do you have any major concerns about what that might do to this gold rally? Or are there other factors driving gold here that make that less material this time around?
I don't think so. First of all, I think the CPI should be called CPI, and the Bureau of Labor Statistics should be BS. Yeah, well, I mean, look, you can look at the other side and say for the multifamily mortgage-backed securities, their delinquency rate rose to 7.1%. It's the worst since 2015. And multifamily mortgage-backed securities are backed by rental apartment property mortgages. So. This is kind of why this is happening. It's because the delinquency rates are real. The consumer is hurting. We have a K-shaped economy where the rich are getting richer and the poor are getting poorer. So what is the Fed doing? They have quietly come in and pumped in at 150 billion into the banking sector quietly over the last several days. They're doing this not to support jobs. They're doing it to save the banks. And
Is that
liquidity.
through repo? Is that what you're talking about when you get
Yes,
that number? Okay.
yes.
Yeah.
And liquidity is drying up, and Wall Street needs cash. So yeah, I think that you're going to see inflation not be as easy to tame as they want us to believe. And I don't even know where those numbers came from, because I thought that the Bureau of Labor Statistics was closed with the rest.
Shut down, yeah.
Yeah, I don't know if those are numbers printed by private entities or what.
They might be private rent. Yeah, I don't have them on my fingertips. I don't know, but yeah.
But the Fed said they're going to stop QT, and it's not because inflation is beat or growth is slowing. It's ending it to prevent a liquidity crisis.
Right.
And,
although growth is slowing, but yeah.
Yeah, but I agree, but I don't think that's why they're doing it. They're doing it to prevent a liquidity crisis.
Yeah, I agree. They're doing it as defensive measures. Yeah, exactly. Against those
it's like something. It signals something deeper is wrong. Let's just put it to you that way.
Yeah. Well, and we're certainly seeing, cracks in the credit system right now. Not enough to say, hey, we got a massive problem on our hands yet, at least. But we're starting to see, these cockroach companies go up, these private credit loans, private credit backed companies starting to show some real trouble as we're seeing the repo demands that you're talking about. So, yes. Okay. So let me try to take a couple of questions here from folks before we hop off. Here's just a very practical one from Judith. If I have a silver ingot, where do I go to sell it?
Well, you could call us. You can go anywhere. The nice thing about gold and silver, especially if you own it in a form that is very recognized. So when you say an ingot, I'm assuming she means a bar, and what size and who makes it. Any of the major manufacturers, any of the major refiners, it's homogenous. It's an ounce is an ounce is an ounce wherever you go. When you deal with a local coin shop, often the convenience factor is such that you're getting paid a lesser return, but it's right there and you go bang, it's done. Or you contact a company like us and we'll quote you the locked in price right then and there, and we'll help you ship it back to us. That's how all the major companies work. We can send you Federal Express air bills to make it easy, and you just drop it off at a FedEx hub. We put the insurance on it. Sent back, we send you an overnight check or a wire, whatever you'd like. But there's tremendous liquidity with it, starting with your local coin shops.
Okay. And just really practically, let's say somebody has just bullion of any flavor, stripe to sell. And, we're not giving personal financial advice right now to anybody, but, this may not be the best time to sell it. Obviously, if you've got demands and uses, fine, but we're talking about a lot of forces that might actually propel the prices of your bullion higher in the not too distant future. But if somebody's got to sell it and they give you a ring, what happens?
We lock it in. We send them an invoice for their records. Either we tell them how to ship it themselves safely through registered and insured U.S. mail, or if it's a large enough order or just difficult for them to do it themselves, we ship them a FedEx air bill that they just package it the way we instruct them, put the air bill on it, and bring it to FedEx. It's that simple. The metal is received. Everything is opened under camera, digital camera, dual custody. There's two people there. Everything from cutting open the box and opening it is under film. Contents pulled out, put on a table for everyone to see. We validate it. Bang, we send them a wire. It's pretty much that simple.
Okay, and when they are shipping it to you through FedEx, I assume it is insured for the value of what they're putting in.
Insurance is on our end. We put the insurance on. FedEx won't insure for you. You have to have dealer supplemental insurance, which we do, and that's why if you do it yourself, you would do it through registered and insured mail, not certified. Registered and insured U.S. mail. They do it up to $50,000 per package. Can't be more than 70 pounds of weight per package. If that is off the table for whatever reason, then we come in and do the FedEx, and we can insure it up to $150,000 per package in a very, very private, quiet way. In essence, we put the insurance on. FedEx doesn't even know it's insured. It's insured supplementally. And It's that easy.
But that seems like a great benefit that your company offers, because of course I'm sure the average person is like, look, this is my money. I worked really hard to buy this thing and hold it. It's now worth something. If I put it in the mail and it gets lost, I don't want to be out of luck there. So your insurance obviously protects against that risk.
And if it's done in U.S. Registered mail, they offer $50,000 worth of insurance as well. So yeah, you never want to send anything of value uninsured unless you'd like to gamble. But, yes, we will put the insurance on for people if it's done through FedEx.
Okay. And sorry, did I hear you say up to 150,000 on your end?
Yep.
Okay. So not that there are too many people who are going to do this, but let's say somebody's got a really big order, hundreds of thousands of dollars worth.
Several boxes.
Several boxes. Okay. You just break it up.
Yes. Yes.
Okay.
And that's the interesting thing when you talk about very large bars. It's getting to a point where dealers, and we have as high of insurance limit as anyone in the country, in the industry. If you have something that is let's say you had a kilo bar of gold, which is 32.15 ounces, and you're getting close to that how do you ship it limit. So having smaller amounts is always good, not just for shipping, but also for utility, for functionality. When I buy gold, I would never buy anything bigger than a 1 ounce gold coin or bar. A silver, you can go up to a 100-ounce bar. I wouldn't really think it would be wise to go higher in that, but think about liquidity on the back end when you buy stuff too. Don't be penny wise and pound foolish, saving a few bucks an ounce by buying a kilo bar, even if it's 10 or 15 bucks an ounce. So you're saving $300 to $500 total on a $100,000+ bar. It would be far better off to buy 32 1 ounce bars than 1 kilo bar, which is 32.15 ounces, and save just a tad bit. You lose a lot of liquidity and functionality.
Let me ask you this. So if let's say somebody has a kilo bar, right? And they say, for whatever reason, you know what? I'd much rather have, what is it? 32
1 ounce bars.
Yeah, 32 1 ounce bars or coins, right? Could they go to you and say, hey, can I exchange my kilo for ounces?
Yep, they absolutely can. Now, it's important to note that a few years ago, the government changed what is taxable and what isn't. And I think it was 2017 or 18, and they call it personal property now. So in theory, if you sell that kilo bar, you're supposed to report it. Now, let me just say this. Last year, the IRS changed their reporting requirements for dealers on selling gold. So the only thing that we have to report would be 3 kilo bars at once, gold, or 100 ounce bar at once. That is the definition of a COMEX contract. Anything else, we don't report. Right. So I'm not telling people to do this. I'm just simply saying if they did and they traded a kilo bar for 32 1 ounce bars, in theory, they should report that as a sale and a repurchase. If they don't, we don't, and that's the risk that they would have to take on their own. My job is to show you what is legal, and you can look over the line. We don't want you to step over the line, but so in essence, it is a transaction that is not reported. All right. Yes, they could do that.
So and on that, and folks, I'm just gonna ask you to respond in the live chat or in the comments if you're watching the replay here. I have a lot of people who come up to me and say, hey, Adam, what's it like to sell precious metals? And what are the tax implications? And what are the reporting implications and all that stuff? Andy, I think if there's interest there, as I suspect there will be, maybe that's a topic we want to tackle in one of the next times that you're on here, which is when you go to sell, like just what should you expect and what are you obligated to do? And what is the party that you're transacting with, what are they obligated to do? Because from what I have learned going through the process of selling some metals, and for other people, folks, not for myself, I'm still holding. But it's been a little bit eye-opening, and I've been actually a little bit surprised at there was less reporting required than I thought. And to your point, Andy, a lot of the obligation is on the transactor, on the individual, right? And I would never tell anybody not to do what was legally expected of them. but there is a little bit less of Big Brother looking over your shoulder in these transactions than I think a lot of people expect. So anyways, folks, let us know what you think down there. Last question, and then we'll wrap it up, Andy. And I know you're always so good at being game to go as long as I, will keep you here.
Well, hang on, one last thing, and one last thing. I mentioned what the gold is, 3 kilos or 1/100.
Yep.
And it used to be different. That's all it is now for gold, period. And this is for the dealer to report, right? Silver, 5 1,000-ounce bars in one time. That's a COMEX contract. Nothing else the dealer will report. So it's always on, the onus is on the consumer. Now we can go down that road next time, to your point.
Yeah, let's go down in detail and let folks ask questions. But you're right. So to your point, like to get, for the dealer to be required to report on silver, you'd have to walk in there to sell 5 COMEX bar, 1,000-ounce COMEX bars at once, right? Which I could imagine that happens, what, 0.00001% of the time? I mean,
only if it's in one of our Brinks accounts, usually in New York City, where though that's a COMEX facility, and a lot of people have 1,000-ounce bars there. But short of that, I can't remember it ever happening.
Yeah, and then why would you sell them all at one point in time, right? You would just, hey, to avoid the issue,
you could sell 4 of them, and then 2 days later sell another 4.
Exactly.
Now that's legal, right? That's what I mean. We show you how to get all the way to the line, look over it, and if you choose to step over it, that's your prerogative. I show you where the line is, and yes, in one transaction, it's not in a year, it's in one transaction.
Okay, yeah. So let's show folks where the line is next time. All right. Okay. Here's a question that comes up an awful lot. So I'll let you answer this, Andy, but I'll just give my quick opine on this.
Yeah.
And folks, look, nobody knows, right? So anything's possible. But I think government confiscation of private precious metals is highly unlikely. Let me put it this way. There are way more things that I worry about first before I worry about that. It's different from 1934 or whatever, because gold was money backing the currency then, and Roosevelt needed to do that, to do the revaluation that Andy talked about. The government does not need to do that now, and just the intense amount of intrusion that would have on public life here, I think is so far beyond what is culturally acceptable right now, at least in America, that it would be way too much of a loss or a pain for the government versus the gain it would get. But that's just one man's opinion here. Andy? Yeah,
you're right. I think if the world saw eminent domain and taking of U.S. gold and silver, when countries like China and have state-sponsored accumulation programs, it is game over. But it's interesting, who is the custodian of the world's largest silver trust, SLV, and one of the biggest in GLD? It's BlackRock and JP Morgan. They're the primary custodians. And, JP Morgan, who paid that largest fine ever issued by the Justice Department a few years ago, $920 million for manipulating the metals market, spoofing, they called it, when people thought they were going to get brought up on RICO charges. They kind of got off with a slap on the wrist. Their head trader, who I had sat at a lunch table with, Michael Nowak, I think is still in prison for it. But they're allowed to be the custodians of the largest silver trust in the world, SLV, and one of the largest gold stockpiles in the world, GLD. So on a Friday night, instead of activating eminent domain, to your point, to risk that global backlash, we will never trust you again. It's one thing to take Russia's treasuries, which is bad enough, but now you take your own people's gold. They could take those 2 accounts, and in the prospectus of those 2 accounts, it says you and I, unless we have a basket which is tens of millions of dollars worth, and they can stop that too in terms of redemptions. But you and I, we can't redeem it. We can only get paid back in cash. So you wake up Monday morning and the 2 million you had in GLD and SLV are now sitting in your money market, and they say, go buy Eagles, go buy whatever you want. We didn't make it illegal. We just closed the funds that are being held with a pink bow wrapped around them by JP Morgan and BlackRock. And so I would say I think confiscation is highly unlikely. And if we did cross that point, we probably have bigger problems at hand to worry about. And eminent domain says they have to pay you a fair price. Again, being paid in dollars, which is an interesting point, because against the basket of crappy currencies, the dollar's down 8 or 9% this year, the index. But against silver, it's down 70. Against gold, it's down 55 or 60. Mm-hmm. And so, yeah, you don't want that to happen, but I don't think it will. I think they could take the ETFs and have their cake and eat it too.
Yeah, and I agree. And I think if they were going to do some sort of confiscation, you would go to where the gold is. You would go to those areas. You wouldn't be going house to house. So those folks who are like, the guy's going to break down my door and search my house, to find the couple ounces I have. Potentially in some corner of the universe, maybe that might happen at some point in time. But like I said, I think there are so many other things to be watching beforehand before something that, in my estimation, remote happening.
Yeah, and in 33, everyone had gold. When Roosevelt confiscated gold as his first act in office in April of 33, everyone had it. It was money in their pocket. Everyone had it. So, and it was less a big deal. Also, you had a country that was probably far more patriotic as a whole than they are today. I don't think it would go very well right now.
All right. Well, look, as we start to wrap up here, I don't know if you guys can see this, but here on my phone, we got silver now at silver futures now at 53.45. So silver has continued to rise dramatically, even over just the course of this conversation. All right. Well, what happens from here? Who knows? But Andy will be helping us track it here on this program. Andy, for folks that would like to either start their own exposure to the precious metals, or would like to add to theirs, and would like to do so through Thoughtful Money's endorsed precious metals solutions provider, which is your firm, Miles Franklin, tell them how they can do that.
Or any questions that you heard on this show or any others. Yeah, we'd love to help. Send us an email at info@milesfranklin.com, info@milesfranklin.com. Please put in the subject line that you heard us on this, or you heard us on Thoughtful Money, and we will send you our special price list. We'll answer any questions, no obligation. If you want to be contacted, please put your phone number down. Check your spam once in a while. Very infrequently, they'll get caught in the spam filter. But we strive to offer the best prices for you, and we update that list once or twice a week. If you find better prices, let us know. We'll do our darndest to beat it or match it. Usually we can. It's not about price, though. In 36 years next month, we've never had a customer complaint, ever. Yours won't be the first. So any questions, you want the price list, or you want to make a purchase, info@milesfranklin.com. We do offer limited purchasing on our website. Typically, you're going to find better prices by reaching out to us and requesting that price list. So it's info@milesfranklin.com.
All right, and I put it up here on the screen, sir, folks, so you can use that email address right there. So Andy, one of the things that you committed to me when we first struck this partnership was that, your firm is known for giving really great service, but that you were going to give real white glove service to the Thoughtful Money audience. And I just have to say, I continue on a regular basis to receive not just positive feedback from folks that have gone through this process and transacted with you, but several that say, hey, you promised me this white glove service, and Andy totally delivered. And I don't want to overpromise to folks, but I mean, just really personalized attention, you or your key staff members to just spend the time it takes on the phone to answer all the questions that these folks have, and to just help folks make the right decisions, the purchasing decisions, depending upon what their goals and needs are, helping them get to the right solutions there, but also just providing really excellent service. So I want to publicly reflect that back at you, what I'm hearing from folks. And I did even see a couple of comments here in the live chat today of very satisfied Miles Franklin.
That's amazing. And thank you for saying that. We're a very unusual company. Like almost all of my brokers are people that I've been friends with since childhood. And they all had very distinguished paths. Wharton grads, private equity, Wall Street, owned businesses, sold businesses, you name it. And later on in life came to work with me, all post 2020. Dear friends that I've known since Little League, almost all of them. And I think we're like a family. And they treat my company as if it were theirs, and it's priceless to me. I could become an online company tomorrow and shed that, and my EBITDA would increase by 35%. I don't want to do that, because I think we are high touch point, and we do provide white glove service. And all the people who work for Miles Franklin are family to me, and they all care about the company, the reputation, the clients. And I'm very proud to say that, and I'm thrilled to hear you say that. And I couldn't thank you enough for publicly saying that. It means the world to me. Thank you.
Well, thanks, Andy. And again, thank you for just your generosity in coming on anytime I ask you to talk about this stuff. And we kind of have a bit of a monthly cadence going on here, but I've been pulling you in a little bit more frequently than that because so much has been happening of late in the precious metals
Always
space.
eager to be here, always.
All right. Well, folks, please let Andy know how much you appreciate his willingness to come on and being so generous with his insights. Please let him know in the live chat there. Please let him know in the comments. Please let him know by hitting that like button. And if you don't already subscribe, clicking that subscribe button below, as well as that little bell icon right next to it. But Andy, can't thank you enough. I'm just so appreciative of this partnership and just you as an individual.
Likewise, Adam. Thank you, my man. Thank you, everybody. Hope you have a great rest of your week, and look forward to picking up where we left off real soon. But if something crazy happens, you know I'm just a phone call away. I'd love to come back and chat about it.
All right, thanks. And everybody else, thanks so much for watching.